Very good afternoon, everyone. Welcome to yet another uLaw webinar. Thank you very much for joining us in today's webinar, which is about law office or legal office expense management. We're going to be discussing about managing client and business expenses, and want to inform you that this particular webinar has been approved for 1 hour of professionalism CPD credits by the Law Society of Upper Canada. So you are able to log into your portal and search for law office expense management and make that as part of your CPD credits. I kindly request you to use our chat window to ask any questions that you may have. And this is going to be a crisp 1 hour session where we're going to cover quite a few things around expense management, the differences between client and business expenses, how can you track, measure, and report these expenses, and some of the significant differences between how you capture, measure, and report these expenses. Okay. And again, as I mentioned, our support staff are online and are able to answer any questions that you may have. Sincerely appreciate if you can dial into the audio using your phone number, because it's always better, higher quality. If you are joining in for audio through your computer, I would, hopefully it's a good bandwidth or an internet speed that you have. Okay. As every uLaw webinar, so does this webinar have an agenda. It's a quite a tight-packed agenda for today, I would have to say. So the first point is kind of going over, what are the differences between, let's say, the client expenses or the disbursements, as they're called, versus the business or office expense that you may have as a legal firm or a law firm, okay? And we're going to talk about what are disbursements to begin with, how do you manage them, and as you probably know, when it comes to client expenses, given the fact that if you're dealing with trust account, you do have the luxury of drawing disbursements or paying disbursements directly out of trust, or you may actually go ahead and expense it through your general. We're going to talk about the benefits, the differences. I'm going to cover a little bit of the types of general disbursements that you come across in a day-to-day legal firm office, right from billables, unit rate, travel time, etc. And we're also going to cover 2 topics that we didn't necessarily cover the last time, which was especially the consultancy, and talk about how you can actually disperse your client, but at the same time either mark up or mark down consultancy expenses that you may outsource. Okay. What are the expectations of the Law Society when it comes to disbursements? So we're going to talk briefly about that, the types of reports, and the documentation that goes behind managing and reporting those disbursements. And after we've kind of covered client expenses, which is the first part of this presentation, which are what we call disbursements otherwise, we'll then hop on to business and office expenses and kind of do the same 101 in terms of how you would track them, manage them, and talk about the different types of expenses that you have, depending on your area of practice. There are certain types of expenses that may be particular to your line of business. But in general, as a business, if you look at office expenses, that's going to be standard, whether it's paper or furniture, rent, membership fees. Those are the different types of office expenses that you would record. Interest and bank charges. And if you are a large law firm, you may have, or even a small law firm, if you have employees, then you obviously have salaries and other types of expenses for your office. And finally, we'll cover what the expense book is, which really tracks and measures and reports all the expenses over time period. And we'll look at how having analytics as part of your business's DNA, if you will, allows you to capture and measure as well as compare expenses and plan ahead. And that's part of our forecasting that we spoke about in our agenda, is understanding what's happened in the past and being able to react and prepare and plan for the future. To make this a little more interesting, the first 20 minutes is going to be about walking you through slides, presentation, setting up the context, and then for the purposes of making this a little bit more interactive, we're going to be using the uLaw software as an example to walk you through how you would go about capturing these different types of expenses. This in no means is a way, or it's a platform for us to demonstrate uLaw. It's going to be strictly used as a complementary system to the slides that we're going to be walking through, and it's going to focus mostly on the expenses aspect. Okay? So that's really the agenda for today. It's about client expenses, otherwise called as disbursements, and office expenses. Okay? So really trying to give you a definition of what a disbursement is, and this is kind of a wiki definition, if you will. Disbursement is the act of paying out or dispersing money. That's where the name comes from, such as money paid out to run a business, expenditures that a legal professional might have to pay out on behalf of a client in connection with the transaction. Okay, so that's kind of the definition, a layman's term, if you will, which we just for clarity's sake, we put in as the expenses incurred for your client by your law office. Okay, and we wanted to kind of add it a little bit more because with every transaction that happens in a legal office, there is an accounting touch point behind the scene. So an accounting term for a disbursement is that you would actually have to record it in your books to balance the accounts when you spend an invoice and recover that expense. So without confusing you or taking it too much down the road, one of the key differences I would say between, let's say, a disbursement or a client expense versus an office expense is the opportunity to recover that expense. Okay, so if it's a disbursement on your client account, you have the opportunity by recovering that expense by raising an invoice, whether you do it through a trust or through general, by raising that invoice and indicating that that is an expense that has occurred in working with that matter, ensuring that it's all part of your terms and conditions within your retainer letter or engagement letter, you are now able to recover that expense. Okay? Whereas as a business expense, it's an expense that you've paid out for your business or your office. There are certain components that you can use for tax credits, like your HST returns, but the expense itself is an expense that you incur and it's not recoverable per se. Okay, that's one of the layman simple definitions and differences that I would say between disbursement and an office expense. All right, so kind of moving along, and as I've already defined, what is a business or an office expense? The expense in the act of paying out money, such as money paid to run your business, as I mentioned, like rent, buying hardware, furniture, any cash expenditures, dividend payments, are the amounts that a business might have to incur to run the overall business. In the layman's term, if the expenses have been incurred to keep the lights on, really, in your legal office. And as I mentioned, one of the significant differences between these two are the fact that disbursements or client expenses are recoverable, whereas the office expenses are not so much. Okay? And a quick question that we had from our last session is why do we track them? I mean, why is it necessary to track your disbursements? Okay? Office expenses, I get it. I want to manage. I want to make sure that I understand where my business is going and what my expenses are. But why really track them? And it's just very simple. It's the fact that if you're in a point where if you don't track your disbursement, you really don't have a good feel for how to, that recovery aspect of that business is something that you don't track. And if you don't track it, you can't measure it. And then that's money left on the table. And that's, that would actually infringe your profit and loss, your actual overall revenue, your expense accounts, everything. So it's very crucial that you track disbursements, even so because you can recover them. And if the cases where you actually have HST returns, so let's say you earn up, after a certain point and you capture HST, then that's something you won't be able to write off on or measure if you're not measuring the disbursements. Okay? So it's very important that you keep a system, a way, a mechanism to track and measure client expenses and office expenses. Okay, so let's now move on to, I think, the second major agenda item. As I let our friends into the webinar, how do you manage disbursements? Okay, what are the key steps? How do you manage these office expenses? Now, at a very high level, there's two ways in which you can manage client expenses as and when they happen. And this is a discipline or a practice that you may want to bring into your firm. One is having a habit or a practice where you disperse using a trust account. So if you're in the habit of accepting retainers and putting that money into trust, you do have the opportunity of building a system or a discipline where it says, you know what, these expenses are, anyway, I'm going to recover from the clients. It's really not my revenue per se, because my revenue is, the charges I'm going to do on my matter dockets. The expenses are something I'm paying and I'm getting it back unless there's a markup to it. So if you're really not worried about markups and if it's just paying out and recovering, unless you're capturing Aeroplan points on your credit card and you need to pay it up front, a good habit would be using trust account, where you actually can pay your disbursement, let's say an application fee, and you can actually write a trust check right out of the trust account for that particular matter. And that's the money that you can then transfer as part of your, from your trust to general once you invoice the client. Okay, so trust is one way in which you can manage disbursements. The other way, obviously, is through general. And what that really means is you obviously pay for that expense upfront as your expense using a general account, raise that invoice, and then send that invoice along with the information about those expenses and hope that you are able to recover that. The advantage there is if you're using, as I mentioned, an Aeroplan card or a TD card, then you can put all that in your credit card. It kind of helps you with building your expenses. Or it may be the case where you're not really dealing with trust money, then the only option you have is paying out of general, right? So what are the key steps? Record when the disbursement was paid, how it was paid, and what the reason was for the expense. Now that we've talked about the two different types, trust and general in this case, being the two different ways in which you can record it, now we're going to talk about what are the different components that you want to make sure you are able to track regardless of the type that you use. So, as I've always mentioned in our webinars in the past, the best way to record any transaction within a legal office is as and when it happens. Okay, if you can kindly build a system and a practice and a discipline to track things as they happen, and expenses are, no different, then you're going to save yourself a lot of grace, and it's really going to help you at the end of the week, month, making it easier for you to have that peace of mind, if you will, at the end of that term. Because you've built that discipline, and you can be rest assured that you've done due diligence to capture it as and when it happened. So what do you record? So you record when the disbursement was paid. So when did that, fax or application fee, court fee, when did that happen? How did you pay for it? Comes back to, did you pay out of trust account, general account? And if you did pay out of your general account, did you write a check? Was it cash? Or did you use your credit card? Okay, so those are the questions that you track and make it part of that tracking process. And so that it's easy for you to manage it, you may also want to record the reason for that expense. Again, as I said, court fee, application fee, if it was a fax, you can add additional description that talks about what that fax was for. Recording the client's name and the matter that this disbursement was related to. Very important. So it's a client expense. So the next logical question is, for what client? And let's say you have a client with multiple matters, then to ensure that it's a differentiation, because each matter has its own life cycle, so you're not combining all of that in across matters, You want to capture the disbursement by client, by matter. Okay, and then finally, a word of caution is if you were to pay it from your general account and decide what portion of the invoice to invoice and then when to send the invoice to the client. So if you're paying out of your trust, then you know that you are able to move that money directly up from trust. It's already taken out of your trust account, so you don't have to worry about it. Whereas if it is general, and we've seen this with a few of our legal friends that do the expenses, incur those charges if there may be interest charges if you've not paid your credit card bills on time, but tend to take a long time to expense or send an invoice over to your client. So as soon as you expense, if you are able to build it as part of your process to pre-bills, do interim bills. Okay, it's two different things, but make a lot of sense. So do a pre-bill, send it to your client, make sure that they understand it, they're happy with it, and they're letting them know you're going to be making these expenses part of that invoice, and then do these interim bills so that you can get your clients into a habit of needing to expect that invoice, and it's not one final invoice at the end of the term. Okay? Many of these things you already know, but we're just trying to reiterate this and kind of set the context. So again, kind of differentiating you to kind of give you the pros and cons, if you will, of doing disbursements between trust and general account. And I think we've already discussed this a little bit. Why not pay straight from trust and kind of our terms, keeping it simple. Now, there are certain types of disbursements that you can pay straight from trust. There are certain disbursements that come only from general. We'll talk about that a little bit further. But just to give you an example, a court fee or let's say an application fee are really good candidates that you can pay directly out of your trust account because those are set costs because you really can do a markup on these types of costs. An application fee is $75. That's what you're charging your client, and that's what you're going to get back. So might as well, pay it out of trust if you can. Very important, when it's paid out of trust account, you don't have to recover the expense. Basically, it's just drawing money out of that trust account directly. Okay? And as I said, it's not your money after all, so you just have to show it as an expense from trust, and that would be reduced. The amount of bookkeeping that's required in managing these expenses, invoicing it and getting paid back would be reduced, the effort. But let's say you're paying from general, which is your business credit card, cash account, owner's pocket. It's very important that you record these expenses, as I mentioned, and all those different aspects, the information you capture as and when it happens. And most importantly, record it with the appropriate taxes. There may be some expenses with tax exempts. There may be others that include tax. And if you have paid tax, then you want to keep that and track that as well. Okay. And when do I recover these disbursements? And how should you do it? Okay, so before raising an invoice, record the expense information with all those particulars. Record the amount that you want to invoice with the appropriate taxes. The third component is a little bit of an interesting aspect, ensuring that if you want to mark up or mark down, and you do that with proper taxes. So let's take an example, and we'll cover this during a little bit of the demonstration that would happen towards the end of this webinar. So there are different types of expenses as we spoke about in, let's say, using general expenses or general disbursements, as an example. Consultancy or outsourced work can be a great example where you have the opportunity to mark up or mark down the charge that you want to raise to your client. For example, let's say there's a stand-in, you have a paralegal or another legal professional that's representing your case at court, and you're paying, let's say, XYZ paralegal for that particular work. And if XYZ has now just charged you $50 or $100 for that effort, you have the discretion to make to your client whether you want to charge $110 because that's your markup. Or if you want to charge $90 with a markdown of $10. So it's at your discretion to make that difference, whether you want to mark up that price or that disbursements are marked down based on the situation, based on the matter, etc. Okay, so that's a very unique example within the disbursement space of how you can actually charge a little bit more on the expenses to your clients. Let's say you're doing a markup. So let's say once you have captured all this information, please make a point to raise an invoice. An invoice is the considered legal document that outlines not only the dockets and the effort that you've put in, but also the expenses that you've incurred in that billing cycle. Okay? And if trust is a part of the equation, once you raise the invoice, you have the opportunity to move that money from trust account into your general account, or if it's a pure play general account, then you're just following up for client payment. So depending on your terms, whether it's a 15, 30-day or 60-day payment term, you probably want to follow up and accept that payment, which would include the expenses as well. Okay, so kind of moving along. So it's been about 20 minutes or so since we started. We've kind of now come to a point where we want to talk a little bit about the types of disbursements. Okay, and you may already know this. Again, as I said, this is a way of reiterating the knowledge we have. So it's kind of reassuring that we're all on the same page. But the one little tweak here is we've kind of tried to segregate or differentiate the types of disbursements and also capture whether you can expense that disbursements, if you will, between trust and general, and what a good thumb of rule might be. So let's say it's a billable disbursement. You could use both trust and general to do it. But if it's, let's say, unit rate or mileage, so let's say it's a travel mileage and you're charging them for that, then it's got to be only coming out of their general account. Travel time is very similar. Recovery of expenses, and we spoke about that just now, about marking up or marking down. So especially when you're doing a recovery of expense with a profit margin, it's again got to be done with general. But if it's a recovery expense on actuals, then you can do both trust and general. Okay? The next phase, I guess, of the presentation is also to highlight a little bit about different types of reports that you can generate, especially when it comes to disbursements. The Law Society has certain guidelines and certain reports that the auditors may ask you for. So some of those documents or reports include the disbursement ledgers and journals, and they're both for trust and general. So that's 2 documents for trust, 2 documents for general, 4 in total. And again, if you don't deal with trust money, then that's just 2 documents, a disbursement ledger and a disbursement journal. Fee book is another great report example, which also captures the appropriate taxes, and they need to be reflected as well. And this is just a simple outlay of the different types of examples that the Law Society provides within their bookkeeping guidelines, which is a great document to review, which outlines these different ledgers and journals as examples. I believe there's a quick question from Mark, and I'm just going to answer that real quick. Maybe I can keep this to the end of the session, if you wouldn't mind, so that I can respond back to that. So I think this is strictly what we're talking about are the expenses. We're not talking about, the legal fees that go behind it. I think the point is that you are able to specifically talk about anything that recoverable on expenses, on actuals, or something where you can use both trust and general, but if actually you're going to be charging a little bit more than what you actually spent on that expense as a disbursement. Yes. Yeah, when we talk about billable type of disbursements, it's not a docket necessarily. We're talking about, let's say, an application fee or something like that. Okay. So it's not the docketing aspect. So we're strictly focusing on expenses only. Okay, so we did talk about business expenses earlier on, and I'm just going to set the stage that now that we've kind of talked about disbursements, which are the client expenses, you've got trust, general, you could pay it out, different types. We then talk about the business expenses. I'm going to kind of give you some examples of the types of expenses and how and when you may be, what might be the best opportunity to capture these types of expenses within, whether it's a legal accounting software like uLaw, uLaw, or other systems that you may have, or manual systems that you may have within your firm. Okay, so what are some of the business expenses types that we're going to be talking about? Office management expenses. So whether you're someone who's just getting started, you're a seasoned campaigner, you know that these are some examples of the types of office management expenses. We spoke about this before, but we're going to just throw a little bit more light on that. Furniture, stationery, a very common fees that you can be rest assured as the Law Society fees. Now, if you're part of the memberships of other associations over and above, the Law Society, then obviously there may be other fees. You may be part of, SABA or Cable or OPA, the Ottawa Association of Lawyers. There's many different memberships that legal professionals have. And then if those are, there's all would be part of your office management expenses. Very common expenses would be phone, cable charges, internet, meals. If, let's say you take prospective customers, or let's say, marketing expenses, that's, part of your advertisement and promotions. And that could be quite a few, and we'll talk about that when we actually get into the uLaw demo. Other expenses include rent and property maintenance. Okay, so you're paying Minto a monthly rent of $1,100. That's part of your office expense. Corporate taxes are an office expense. Bank charges. So let's say there's a certain charge on, maintaining dollars within your bank accounts, and the bank charges you for that. That's part of your office expense. Dividends that you may pay out, and salaries, and everything that you would consider as an expenditure to run your business, broad brush, would be part of your office expenses. And these are just some subcategories. And the reason why we talk about subcategories is that at the end of the day, you are now able to track and measure categorically. So it's not just a broad brush of office expenses and it's $3,000 is your office expense. Now, there could be more insight to how that $3,000 was actually spent. The $1,000 went into rent, $500 went into meals, $500 went into gas expense. So breaking that overall number into subcategories gives you a far better perspective of the types of expenses that you're incurring, so that, as I said, the whole point of tracking and measuring is so that you can react and improvise and be more productive. So, for example, if you realize that you're actually spending a lot of money on rent, and if it's not reflecting your bottom line and the type of expenses that you want to have for your firm, knowing that that's the highest category where you spend your expenses may just motivate you to look for another office or find out a different way to negotiate a rent with your rental manager, etc. Okay, so that's really why you want to keep a subcategory of all these office management expenses. Okay, moving along. Now, we spoke about how you manage and record the different types of information that you record for your disbursements. And we're going to now talk about the different pieces of information and the particulars of how you record your office expenses or business expenses. The one thing that's common between the client expenses and office expenses, as I always reiterate, maybe a bit too often, is record it as and when it happened as much as possible. Okay? If you've just incurred that Law Society membership fee, get into your bookkeeping software or get into that system that you have to track it and measure it, input that fee right away as and when it happens. And what information are you capturing? Date of expense. So that's common between the two. When did it happen? Capturing the date of expense. Name or title or a brief description of that expense. Okay, what was that expense for? What was it to begin with? And here comes the subcategories that we spoke about. What is the type of expense? Okay. Was it an advertisement? Was it a rent? So further classifying that expense into these different categories, as I mentioned, gives you better perspective and a better categorization of that expense. Then we talk about the amount. What was the total amount? And the total amount could be the subtotal plus the appropriate taxes. Certain expenses that may not, if don't have HST components or tax components, that's great. But if they do, you certainly want to capture that as well. The reason why you want to capture HST is if you're, in the business and habit of paying HST, the fact that you've spent HST kind of, balances out the ones that you paid. So you compare the total HST paid for that time period, let's say for a quarter or a year, and the HST received from your clients, subtract, and then that tells you whether you owe the government money or whether the government owes you money. Okay? How was this expense paid? So we're talking about, did you pay it out of using a checking account? Did you pay it out of your, general savings account for your business? Did you pay it out of your credit card? Now, interesting things are, the reason why we talk about capturing how you paid for it is also understanding if someone else in your firm paid for it on behalf of the firm, whether it's yourself who's the owner of the firm, or let's say it's your employee who paid for it because, he had to at that particular time. Knowing that information is important because your firm then has to decide the payout. Whether if it's your employee who paid for that expense, let's say there was a gas expense and you forgot your wallet and or purse, and if that employee paid for it, then your firm then owes that money to that individual. And the last aspect of this whole expense for office expense is obviously who did you pay it to? So if it was a rent, was it Minto Realty? If it's furniture, was it IKEA, etc. Okay, if it was advertisement, was it Google AdWords for the month of August? So really capturing the date, title, what was that expense, what category did you put that expense in, the total amount, very straightforward. How did you pay for it? Who did you pay? Pretty straightforward, I think. Now that we've looked at the different types of documents that the Law Society wants you to capture for client disbursements or client expenses, let's take a look at a few of the office expense documents. So you've got your expense book. Okay. So really, what was the total expense for that particular time period, including your taxes, HST, GST, PST, based on the province. The HST statement itself, or HST or tax statements. So that's another important document for your office, where I just mentioned, which outlines whether you owe the government tax or whether the tax, the government owes you HST back. The total overall expense statement, profit and loss, etc. So these are just some of the types of documents that you will come across as you capture expenses for your business. Now, the last topic, before we actually jump into walking through a life cycle of how you would capture these different types of expenses in your law firm, is in today's day and age, we're going to be talking about expense analytics. And the reason why we talk about analytics is in today's day and age, with the advent of technology, I reiterate this again, within legal tech, you have now the opportunity where lives can be made easier. Technology enables you and is there to empower you and truly amplify that effort so that it's easier on you to be able to have systems do all the crunching rather than you having to do it manually. So an analytics engine, which may be part of your legal accounting and practice management software, can provide you with insight into many of these different pieces of information that you may have never asked yourself to begin with, okay? So examples could be, as I mentioned, what are the top expenses? You know, it seems almost that whatever is coming in is going out, so, you know, what is the problem here? So you really want to understand where are my expenses and take a tab on the top expenses. You know, what is the ratio of expenses between the monthly, quarter, and yearly? So has my rent reduced over a period of year, or is it the same? Okay, so the data that's behind all that work that you're putting in can now be transformed into these actionable insights that are very crucial for you to manage, sustain, and improvise and be more profitable within your law firm. And when we talk about the health of a business, it's not just the revenue that's coming in, but it's also the expenses that are incurred, because that finally is what equates to your profit or loss. So expense, as important as revenue is, and we have a totally different CPD session that talks about, you know, how you, the different types of revenue streams that you can bring into your legal firm and have you categorize and capture that. Today's topic obviously is on the other side of the fence, which is the expense, equally important, right? And the analytics obviously allows you to visualize these critical KPIs or key performance indicators, if you will, or the data behind your firm in easily visualizable charts and graphs, making it easier for you to consume that data. Okay, so one way of doing it is obviously through Excel sheets, tabular reports. But if you have a really nice graph that tells you that 80% of your expense went to rent, it is very visually appealing and it's easy for you to capture and digest that data. And why you do that, as I mentioned, you get to know the unknown and you react once you have that information, and you plan so that you can now recover or improve or actually continue down the straight path. If you're doing excellent already, then you just want to pat your back and continue down that path of sustaining that same level of expense. So really, analytics is a way for you to measure what you've tracked and gives you the opportunity to react in consuming that data for the betterment of your law firm. Now, before we jump into product demonstration, obviously we want to talk slightly about the benefits of a legal accounting software. So it's crucial to talk about a legal accounting software because a legal accounting software kind of takes care of both sides of the house in terms of expense. It's something that would capture both your disbursements, which are your client expenses, as well as the office expenses or business expenses. It allows you to capture it when and where it happened, okay? And the fact that you're able to now reconcile both general and trust within a legal accounting software, it allows you to keep your booking records or your bookkeeping records as close as possible to real-life bank records, okay? Because that's a big part of your business is reconciling your trust and general. And the legal accounting software would allow you to do that. And finally, it's all about compliance and the fact that these documents and reports are all available to you as part of that software package because the software does the work for you. And investing in any software that is a legal accounting that gives you those compliance record is obviously a well-made investment. That's one work off your checklist, okay? So you don't have to now manually go in and do your manual process of generating those reports because legal accounting softwares will do that for you. And the most significant benefit is point number one, is the fact that a legal accounting software captures the legal world expenses, which is really your client expenses, which are the disbursements, but it also would allow you to capture, or should allow you to capture, your business or office expenses, which is slightly the other side of the house. Okay, now I think it's that time where we now shift gears with the next 15 to 20 minutes that we have in this webinar, where we're going to take a simple example of a client intake. We'll bring in a client, we'll matter that client, and let's walk through the different types of expenses that we just spoke about for that client. So we'll cover the disbursements or client expenses for that client, and we'll kind of reflect on that. And then we'll also jump into how you can bring in different types of office expenses or business expenses as well. And for those who don't know who we are a very proud Canadian legal accounting and practice management software, and kindly do check us out if you're interested at uLawPractice.com. And yeah, we do offer a no obligation 30-day trial sign up. That's on our website as well. So real quick, I'm going to shift gears. I'm going to jump into uLaw. I'm not going to focus on any other aspect, as I said, because this is strictly to complement today's webinar, which has been approved for CPD credits, so that you get a better feel for how you would do this, in a very practical way. So for the sake of today's demonstration, let's quickly go in and add a client. Let's just say Noah. We'll give Mr. Yannick a quick address. Welcome his mailing address. Might maybe categorize how Mr. Yannick Noah got to know us to begin with. And let's go ahead and save that particular client. Obviously, you can add a lot more information about that particular client, but I'm not going to do that for today's context. So let's say you have Yannick Noah's information. Let's go ahead and create a matter for Yannick. Clicking on the Matter tab obviously gives you, so let's go ahead and create a new matter. Let's go ahead and create a small claims matter. And this could be anything, right? This could be real estate, this could be criminal, this could be a family matter. The different types of disbursements obviously would differ, the prices may differ, but the concept remains to be the same. Just to show you an example of how you would use trust money in this whole equation, because we did speak about that being a way of dispersing, let's go ahead and accept a retainer so that there's some trust money involved. So let's go ahead and add a new retainer real quick. So I'll just put this to be earlier this week. I'll say we just got $600, and I'll say we received a check. And I put that into my trust account. I'm not going to generate a receipt for now. I'm just going to go ahead and apply it to this particular file that we just created, or matter. And there it is. I've just now taken a $600 retainer. Now let's go ahead, and for the sake of some of the questions that we had today, I'm just adding a quick docket. So about $200 an hour. Having spent 30 minutes on it, I'm taking the luxury of charging my client Mr. Yannick 1 hour for the work that was done during that initial client meeting. So, typical life cycle of a matter, right? So you've got a retainer, you've done some work, this is really your revenue, the $200 plus tax. And now let's focus on the expenses, the disbursements, or the client expenses, if you will, and look at the different options you have. As you've noticed, you've still not raised an invoice, so I'm not going to do that yet. And hence, that's why this is the projected balance. So let's go ahead and do that first expense. And I'm going to start off right away using the trust expense, or the trust way of doing your client expenses as the first example. To do that, I'll say add new disbursement, and I'll say I paid from trust. Okay? And I'm going to say $74 was actually the application fee, and let's say I paid it to Ministry of Finance. Okay. Now this is money where you could write a check right off your trust account. Let's create that check, or print that check rather. So this is money coming right out of your trust account. So what was $600 before this particular transaction, as you notice, is now $526. So let me go ahead and print that check. And that's money coming directly out of your trust account, and you don't have to worry about anything else now. Okay, that's $74 towards that Ministry of Finance for that application fee. You've got your remittances at the bottom. Fantastic. So that's how you would represent, let's say, a trust disbursement. Okay? You don't have to do any invoicing so far to recover that expense, because it's already paid out from that original retainer amount that you received. Okay? It was just drawn right out of that. Now let's move on to some other examples, now focusing on the general disbursements. Okay, we did speak about the different types of expenses and the category that would fall under trust or general. So I'm going to now add a new disbursement, and I'm going to pay it out of my general. Instead of my trust, the first example was trust, the second example I'm doing is general. And this was really the point I was trying to make too, is the different types of expenses: billable, mileage, unit rate, travel time, etc. Billable being, let's say, a court fee. Okay. The court fee, let's say it was $60, and maybe it was tax exempt. So we're capturing now an expense which did not have tax, right? $0. And we spoke about capturing when did this happen. So really important to capture the date. You can always backdate this. What was the item? You can add additional descriptions if you like. What was the amount, and did that include tax or not? And for the final piece of information is who did you pay it to and how did you pay for it? So this is being a general account. So let's say you wrote this to okay, I'm just making it up. Now you have a few options, especially because it's your general account, because you may have multiple general accounts, right, for your business. For example, you may have your general account, like a checking account. You may actually have a credit card that you used. And we spoke about others in your company paying for it. So if instead of you, let's say this was Mr. Will Smith, who was part of your firm, paid for it, you can capture that right away. So then your firm, Roger Moore's firm, would then owe Will Smith the $60. Or you yourself, as Mr. Roger Moore, who's the fictitious lawyer here, may have paid it and you may have paid out of your cash account. Okay, but I don't think court fee is a great example. We'll use something else for that. For now, for the court fee, let's say you used your general account. Again, you wrote a check to the Ministry of Attorney General. Again, you can print a check. I'm not going to do that. So here's a second example of how we've just captured a general disbursement, which is a billable type for court fees. So we've got an application fee, which was to trust. And now we've got a court fee through a general. Okay? Now let's look at a few other examples. Another example we spoke about, and I'll do that from general, was unit type. So I'm going to talk about faxes. A little bit more description. Now you see this is really not more a dollar, but it's actually a quantity. So let's say you charge $1 per fax as your disbursement fee to your client, and you've just done 60 different faxes. The bottom part, because the legal accounting software manages both your office expense and your client expense, here's a great example of the advantage that system brings. The top part is really your client expense. You're dispersing your client. You're charging him for that fax. But the bottom part is the office expense, capturing it as and when it happened in both sides of the house. So let's say, for example, that particular day your fax machine didn't work. And this is always a great example I provide. And you had to go to the nearby Staples to fax that 100 copies or 60 copies of fax. Okay? If you're not going to raise that expense, and if it's just done out of your office, you probably will not report that expense. But if, let's take that example where your fax machine didn't work and you went to a Staples, then that is an office expense, is it not? The answer is yes. I totally forgot that this is a monologue, so I'm sorry about that. Yes. So this is an office expense. So let's capture that expense. Okay, so I'm going to say, unfortunately, I was charged $65 because it was a ripoff. And I paid and I used my credit card to pay for it. And let's say that is a 16-digit reference number that your RBC credit card provides you, or TD credit card Visa provides you. A very important aspect to keep here in mind is in paying that $65, let's say you paid $8.45 tax, okay? Because Staples would have charged that HST for that particular amount. So this is very crucial to keep in mind. The $8.45 is just HST that you've paid, your firm has paid for that tax. So two things are going to happen through this process, through this transaction. The top part is going to disperse your client for that $60 plus tax. The bottom part is going to make the office expense for this transaction behind the scene. Okay? So you're going to notice within the file, the client expense or disbursement show up. The fax, $60 plus 13% tax. Okay? We spoke about the markup, markdown concept within disbursements. So let's take one quick example before I wrap this up, which is the consultancy expense. And let's say paralegal let's say you're charging your client $100 plus tax. And let's say for this particular example, you used a third-party paralegal company or an individual. And Megan Paralegals basically charged you $120. Okay? So they charge you $120 plus tax, so $135 in total. Now you have the opportunity of either marking this up to 140. Thereby, you're now charging your client 158.20. Okay? Or you may mark this down. So you may actually say, you know what, that's fine. I just decided to keep this particular expense below $100, so I'm going to eat that extra cost, and I'm only going to charge my client $85. So this is totally left to you, but you are the one who would decide what that is. If this has got to be a markup, or if this is just going to be the same amount, perfect, and you can do that as well. Okay, so this is the part of a consultancy expense where you can mark up, mark down, or keep the same cost. Same concept. What did you pay that for? How did you pay for it? Now that you have these different types of expenses and you've dispersed your client, you can quickly jump into raising an invoice. You can do a pre-bill. The lack of time, I'm just going to go ahead and create an invoice. You can see there's still money left in trust. It's about $30.95. So this is an interim bill that they have through the process. Let's go ahead and generate that invoice, download it, and let's have a look at that invoice and make sure that it reflects all of those different disbursements that are part of this now billing cycle. Okay? So this was a work that was done for this individual, Yannick Nova. If you remember, that was just one docket, which is the client meeting for $200 plus tax. But here comes the important aspect. So here are all the disbursements that have occurred in this file, or client expenses that have happened for this matter, for this client. So where do we track that? So here's invoice number. Here's Mr. Yannick Nova. And it's all under the file number YN25871. Okay? You can see there are a few that have HST, a few that don't. You've got your court fee, fax, and the paralegal fees. Now you may be asking, where's the application fee? We've got that covered too. So a component of the invoice, which is a running bill, also talks about the different trust touch points. So within trust, two things happen. The first thing is that you receive that retainer of $600. But another important thing happened. Remember, we paid out that trust disbursement for that court fee. And here it is, or application fee rather. Here's that $75, and that's what's taken the $74 directly out of the $600, keeping that at $526. And at this time, $526 minus all the disbursements of taxes that have happened, that's the amount left in trust. You would now go ahead, obviously, and move that money from trust to general, including all those disbursements in general. And now quickly, let's talk about the next aspect of it. Let me choose it all. I'm going to use a check to move my money from trust. Let's say I'm putting it into my general account, and let me do that transfer. Now we spoke about the law society documents that go behind the scene. Let's quickly look at those. So if I go into my compliance, I'm going to look at my journals, ledgers, general receipt, general disbursement. Okay, let me check the general disbursement, and I will do it for this month. And if you look at this particular document, which outlines all of the work, it's going to talk about these three final line items that you're probably aware of. For the Yannick Nova matter, there's a paralegal fees, which is a general expense, $120, including the $15.60 of tax, the court fee of $60, and the fax that you paid Staples, including the $8.45. Okay. Now let me jump into the business expense real quick. And to do that, let me show you how you bring in your office expenses. So within expenses, you've got your different categories. And within office expenses, as we discussed, you have the opportunity and should, in fact, categorize them so that it's easier for you to track. So within office expenses, you want to make sure you create enough categories so that you can quickly understand those. And let's say this was a membership fee or a software expense or legal society fees, you could say. They've provided you an invoice, you can capture that. The pre-tax amount, who did you pay to? How did you pay for it? Could it be in your another check? By the way, that's how you now capture your office expense, which is totally outside of your client world, if you will. These are just business expenses that you've incurred, and there's many ways you can capture it. So one way is to capture it as and when it happens. There are other ways that you could capture it where you can bring in your entire bank account, export it into your legal accounting software, and just do it one at a time at the end of the month. So that's another style. Regardless, when it comes to the final documents that you need to be aware of, one such would be your HST document we spoke about. You can do your monthly or quarterly HST reports, depending on your business. And the key to note within any HST document is to capture both the HST paid and HST received. And the fact that it's a legal accounting software, you can rest assured that it would capture both during the same as and when it happens. So just to give you a quick example, the legal accounting software such as uLaw captured the tax, the $8.45 of tax that you paid, the $15.60 of tax that you paid to the paralegal or Megan paralegals, as well as the August invoice that you just paid. Now, in addition to you capturing the HST paid, the legal accounting software also captures the HST received from your client. So for the Yannick Noah example we just looked at, we received $16.25 from that disbursement, another $26 for the $200 docket that we had, and the final fax disbursement where we paid $7.80, which finally equates to telling you that you as a firm owe the government $556 of HST this month. Okay. And for the last topic that we spoke about was around the analytics. Now you put in all this effort, you've docketed, you've dispersed, to know quickly what your expense book looks like. So what is my expense by category for this month? And this is powerful for you to know that expense on client, which is really good because that's a recoverable expense. It's one of the largest expenses, closely followed by the expenses to your consultancy groups that you paid, and the law society fees being kind of third largest expense. Okay. Now you are now able to compare it with, and this is something we spoke about, is tracking, measuring, and then reacting to that data and digesting that. I want to now, let's say you have the opportunity to compare this expense category to the entire quarter. So this is the month of August, and how is it compared to this overall quarter? Okay. Okay. So you could see that it's about 64%. It's gone up by 3% to 67%. Your consultancy expenses are still the second largest at 12%, whereas compared to this overall quarter, particularly in August, that's increased by 8%. So at a quick visual glance, you as the owner of the firm or part of that firm are able to now digest the information that's behind your law firm's legal accounting software. And this is the power of an analytics that can give you that information and that insight. Okay? And with that, I would like to open the floors for any questions. The key aspect, if I were to go back to my presentation and in today's agenda, was to really talk about the law office expense management. Okay, so we did cover the different types of disbursements real quick. The different types of the disbursements and office expenses as two different silos. And specifically within disbursements, we spoke about managing it through trust, the advantage of that, managing it through general, and the different categories of disbursements across both trust and general. We spoke about that. Okay, and we did have an example right within uLaw where we're able to do a billable, like an application fee. We did a unit rate, which is a fax. And we also did an outsourced work or consultancy expense where you were able to mark up that disbursement to your client. And we quickly spoke about the different types of office expenses, and we did reflect in uLaw where we had that Law Society membership fee as an example of a business expense, and there could be many more. That could be rent and others. But the key aspect to that was ensuring that you had a mechanism of categorizing these expenses so you can easily track them and react as part of your analytics. And we did generate the journals and ledgers, and you're obviously able to generate the expense book, which is a very important document. And I guess before I wrap it up, I will generate that as well. So here's your expense book. And again, do it over a date range. It gives you a total understanding of the expenses that have happened. Okay. So far, if you were to categorize it, and here's the categorization of all the expenses for the month of August. Same thing that we looked at in the analytics. Okay. Okay. So with that, I will open the floor for any questions, and kindly do use the chat window. And I sincerely request you to participate by asking questions or giving us your feedback on this particular CPD session. And thank you once again for participating, and we look forward to seeing you at our next session. And I will now open the floors for any questions. Okay, we've got our first question. How do I bulk import my expenses on a monthly basis? I'm assuming that's a good question. Not sure if that's a lawyer asking this question because I don't see your name, or if it's a bookkeeper who's joined us today. One of the ways that we capture expenses, we're obviously going into the expense itself and doing it one at a time, right? So really reporting it as one at a time. When we did the Law Society membership. Another way that you can capture when we talk about bulk, I'm making the assumption that it's a faster data entry. So you do have a batch import. So you could say at any time, I want to capture 10 different expenses as and when it happened. So you could say rent, $2,000. It's an office expense, so you can categorically capture that right away. So this goes into your rent and taxes. Okay, and then kind of move on to the next one at a time. So you can always do that. Another way that we love you to do is through an import feature, where you can actually import your entire bank statement. So let me give you an example of that, and I hope this gives you a better perspective. I have just, for an example, I've downloaded, for all my demos, I use one of my older TD statements. And I've just downloaded a CSV file, which you can do from other bank accounts. TD-RBC allows you to, I wouldn't say migrate, but basically download your entire bank statement for that month. And let's say you're doing it for your general account of all the expenses that have happened. As I said, there's the different banks that we support. So I'm going to choose TD, and I'm just going to say upload. And what we do is we scan through the entire CSV, which are an Excel sheet format, and then bring all the different transactions row by row, and then present it to you in a format where you now at the end of the month or end of a week. So this is not so much inputting it into uLaw or any expense or any legal accounting software as and when it happens. This is a style where you're actually waiting for a time period to complete and using the facility to bulk import. So for example, let's say the India Curry House is an office expense. And I'm going to say that it's meals. Okay. So import that. I could do my Starbucks, I could do my Walmart, all those different expenses that I have, I can bring them right away into uLaw through this as well. So here's my Rogers Wireless, I could say office expense. And if I don't have a category, I'll probably call it a phone fee and put it under that. Okay. Phone charges. I hope that answered that question. Okay, so if there aren't any more questions, I thank you once again for participating in today's CPD webinar. And this session will be recorded and will be made available to you early next week. And we would sincerely appreciate it if you could send us an email confirming your participation so that if we are asked for any audit requirements, we're asked for the participants today, we're able to show it to the Law Society. So thank you once again, and look forward to seeing you in our next session.